all of these cues really impact our own markets as well as what the trade setup looks like this morning. We have Ekta, Nigel, as well as Surbhi joining us with the trade setup. Guys, a very good morning to all of you. Ekta, let me come to you first. The handover at least looks positive. Okay, it looks... Ekta, I think you're on mute there. Okay, I think there's some trouble with Ekta's audio, so we are going to try to reconnect. But in the meantime, let's just go through, like I was pointing out, all of the Asian markets are holding up really well, right? And it is the Hong Kong market which is doing the best. So it is 1.5% higher. Nikkei also holding up really well with, 1% in terms of a gain. But I think Ekta's back with us. So Ekta, if you can try again. Okay, unfortunately, we have troubles with connection this morning. But in the meantime, let's talk about all of the stocks that could be in focus this morning. So we have Surbhi standing by with that entire list. Surbhi.
Good morning. Multiple cues to watch this morning. The first one comes from Tata Power, where the company subsidiary Solar Systems Limited receives a letter of award worth 1755 crores. And this is to set up a 300 megawatt solar project for NLC India Limited in Rajasthan. Also, Praveer Sinha is to be reappointed as MD and CEO for another 4 years. GR Infra Projects receives multiple letter of awards from NHAI. This is worth 475 odd crores. Bharat Electronics, the Defence Ministry signs 12 contracts with the company worth 8,200 odd crores. This is for Indian Armed Forces. Maharashtra Seamless has received orders from ONGC worth 537 crores for supply of seamless casing pipes. Lupin, where US FDA inspected company's Pithampur manufacturing facility and has issued Form 483 with 10 observations. And lastly, Sansera Engineering, the company makes strategic investment in MMRFIC technology for 20 crores by way of issuing close to 150,000 compulsory convertible preference shares.
All right, Surbhi, thanks a lot for running us through that entire list of stocks and catching us up on all of the action that came through yesterday. But with that, let's also talk about all of the cues from the futures and options space. We have Nigel standing by with exactly that. Hi, Nigel.
Well, morning, Pavitra. Records are meant to be broken, right? And the bears are all set to break that record because for the first time in many, many years, in more than 20 years, in fact, we're going to have fourth straight negative month for the Nifty. That's not happened all the way since 2001. That's between June to around September. So for the first time in very, very long, we're going to be having that negative month, unless today, we rally more than 2%, which is unlikely to be the case. We're starting off a new series, right? And the FIs, they're aggressively net short. They're the most aggressive on the short side at the start of the series from whenever I can remember. So I think that's a record level as well. At the start of the series, they're 91% short positioning. And just giving a reference point at the start of other series, well, the short positioning wasn't as high. In terms of options data, well, the 17,000 put as well as the 17,000 call, they were fairly active, premium at around 70 and around 180 rupees. So that's telling you that we're in a bit of a band. And we could be in a broad 400-point range just in the near term. So on the downside, it's the recent support level that we're looking at. And on the upside, it's a technical level, 17,220. That's the 20 DMA. So just keep an eye out on that range. But the sense you get is every time you're going to around 16,900, risk reward is favoring you. And that's likely to play out. So just look at that, the intraday lows that we have seen. From there, we've normally seen a bit of a bounce. The SGX Nifty actually adjusting for yesterday. It's indicating a start in the green. So let's see how things move from here. Maybe we'll see a 30-40 point bump up. But more than the Nifty, I'll be watching the broader markets. Was that a flash in the pan, or are we likely to see continued buying from the broader markets? Very crucial.
Very crucial. We will wait by and see how that really pans out. Nigel, thanks a lot for that. But it looks like Ekta is also back, so she can run us through all of the cues that we're watching in terms of the market. Ekta, like Nigel was pointing out, fourth straight series where we are seeing a decline, but take us through everything we should watch.
Yes, absolutely. On Wednesday, in fact, we did see broad-based gains. The markets closed at the day's high. The market breadth was favoring the advances. So the NSE advanced decline ratio stood quite strongly. Sentiment was further added by FIIs buying for the second consecutive day. FIIs net bought around 1,245 odd crores and DIIs net bought as well. So overall, it seems as though sentiment is improved on the back of the banking crisis seeming to have stabilized globally. For example, the US markets closed higher. The jobless claims cooled off a little bit on a week-on-week basis, indicating that maybe the US Fed is coming towards the tail end of its rate hiking cycle. Europe markets closed higher, and Asia is largely in the green as well. SGX adjusted for 2 days of trade is indicating that yes, maybe we could start a little bit in the red. So let's see how that pans out. But overall, the sentiment seems to be positive and everything seems to be lining up in terms of positive cues. Brent crude moves up to $79 per barrel, so do watch out for that. And we do have the core personal consumption expenditure price index, which is due from the US markets today. So that will be something that the street would watch to give an indication on what the Fed is thinking when it comes to inflation as well. Back home, in terms of the macros, we had the borrowing calendar and the SEBI board meet outcome. So 2 pieces of news to watch. Overall, it's a holiday shortened week. And it is the first day of a new series. Participation could possibly be lower. Going into next week, we do have the RBI meet, and separately, earnings will be on our mind as well.
All right, Ekta, thanks a lot for running us through all of those cues. That is everything that you need to watch ahead of the market opening today. But with that,